Bryce here. Today, let's talk about four aspects of being good at sales. And this video is for people who weren't born great salesmen. So, in the video, we're basically going to cover close rate stability. We're going to cover lead quality, lead sourcing, lead experience, sales flow, consultation styles, price point control, sales cycles, as well as cash flow control. Now, the reason why this stuff is important is because I know a lot of people that were like they were really good at sales like naturally, and that was not the case for me. If you guys know anything about my story, for my first 36 consultation calls I did for bookkeeping and CFO services, I got one client. That means there's 35 times that someone said no, or I need to think about it, or I don't want to pay that price point until I figure this out. So this is not something that I was just like born with. This is something that, I mean, I basically had to learn from the ground up exactly how to get people to want to work with me across three different business models. So my career, successful businesses, my bookkeeping slash CFO business, mentorship program, as well as doing like a lot of like art sales, like an art business. Now, I've paid as much as for a single course alone, $25,000 to learn about sales, right? So someone would sit on my consultation calls and just like watch every single one of them, scrutinize them, see what I could improve, see what like I was doing wrong, and make sure I was doing the stuff right. So it's like this is stuff I've paid a lot of money for sales, and I'm giving it to you for free on this call. Also, if you want some help, maybe growing your business, so whether you have a bookkeeping or an accounting business, and maybe it's just not quite going the way that you want it, and you want some help to be able to go and streamline your processes to be able to go reach your goals as fast as possible, go ahead and click the link inside the description, either above or below the video, to book a call with myself, see if I can help you inside of our mentorship program. So, what someone asked me, why do I kind of make these longer videos, right? Because like sometimes I make short videos, sometimes I make medium ones, sometimes I make long ones. The reason why is because I oftentimes get asked questions, or in the past, like I'd have people come on like the consultation calls to learn about my program, and they basically just like ask a million questions. So in like an attempt to like reduce the number of questions I have, I basically teach you guys this stuff so you know exactly like what we do inside our mentorship program. So when you actually come, you already know a lot of stuff, you're very educated, and you're able to really get an understanding of like how to grow your business, right? So at that stage, only thing I really do inside our mentorship program is provide customized, detailed support to help you exactly where you're starting out. But by having a really good base and like understanding a lot of this stuff, it does make it a lot easier for you to, be a better business owner just in general. So these videos are very, very detail oriented and action packed because I want for you to be able to learn stuff and be able to be a good business owner even before working together. So jump into this thing. So four aspects of sales, okay? Close rate stability, that's consistency. Price point control, that's price. Sales cycle control, that's speed. And then cash flow control, that's the terms of your sale. Okay, we're going to talk about all four of these things to be able to help you boost your sales skills. So number one, close rate stability. So your foundation of sales is built on this. If you can't consistently sign up new clients who are not referrals, I'm not talking about referrals. Anyone can sign up referrals, right? It's not hard. That's why we tell people to get referrals inside of our program. It's not hard. But if people who are not referrals are coming to you, if you cannot consistently sign up those other people, you're always going to be stressed out. And the reason is because of unpredictability. So, like I told you, when I was starting out, I got one out of 36 consultation calls to sign up. It was for a cleanup project where I had to go back like 3 years to provide financial statements, so you could actually go and apply for like an apartment building. I'll talk more about that story actually in a couple minutes. But the factors that impact your ability to have a consistent close rate. Number one is your lead quality. So lead quality because as the name suggests, like what is a quality lead, right? Not all leads are created equally. I used to think that if someone booked a call on my calendar, they were all the same. It's not the case at all. So there's some ways to improve lead quality. So number one, what you can do is you can make leads fill out a questionnaire and get on a call with you. What used to happen for me was I would just have like random people like book a call and they'd be like, oh, they would do no research about me beforehand. They wouldn't know why they need a bookkeeper. They wouldn't really know anything. And I would have to do like so much work in the consultation call to first educate them on why they needed a bookkeeper, then why they should work with me, and then why I should pay my price. That's three sales all in like one call. That's extremely hard to do. So instead of making them fill out a questionnaire, I only get serious people. I get people who are more informed. They've answered questions about this, about my like why they want to work with me, and it makes things a lot easier to kind of do on the sales side. So it will drop your volume of consultation calls, but it'll make it a lot easier for you to sign up clients on your call. Now, most people when they like make questionnaires, like they'll ask questions on like how many bank accounts do you have? Do you have any partners? Do you have any loans outstanding? How many credit cards? And like they'll just do a bunch of like stuff like almost to price up their service before they get on the call, which I recommend like you do want to price your service before you get on the call, but I use my questionnaire to find out more about like how close is the person actually wanting to work with me and paying me money, right? Because like the more that I can get someone interested in working with me before the call, the easier the call is and the more of like a formality it is. So it doesn't take that much like work to close, right? Um, I'm kind of risk adverse or not risk, I'm kind of work adverse when it comes to a sales consultation call, right? I just like easy calls that are really good. Right? Because I don't know if you guys noticed, but I'm not really a salesperson. That's the big thing. I'm not a salesperson. I'm a business owner, right? So it's slightly different. If you're like a salesperson, then you wouldn't really care the lead quality because you just want to get everyone on the phone and see if you can close them down. It's like, no, it's not really that big of a deal for me, right? We have a lot of volume, we have a lot of good things. We want to actually like close down the people that are not serious as much as possible, right? And that works easier, especially like if you're getting started, you have like a job, right? You don't have a million hours a week to do a million consultation calls, or if you're new to sales and you're not really used to dealing with like rejection, right? Because like the more unqualified calls you do, the more rejection you have to face, and the easier it's kind of like feel sad or burn out or just not like sales. Next thing is going to be like lead sourcing. So like where did you actually get the leads from, right? It's like referrals versus Craigslist versus LinkedIn, ProAdvisor, Thumbtack, cold callers who are random. Like all these can have a different kind of lead quality, right? So sourcing goes back to quality because other some sources will be better than others, right? Because for example, let's say that someone comes off of your LinkedIn where your LinkedIn educates them, has testimonials, has references, has content about how you do that's gonna be a much higher quality lead because they can research you than like maybe someone who just got a random cold call, right? Or they maybe saw you like on Thumbtack and now they're talking to five or six other people, right? I like places that are very exclusive with leads. When I say exclusive, so for example, Thumbtack or like a Bark, when you pay for the lead, they basically sell that same lead to 5, 6, 10, 20 other people at the same time. So every single time you get a lead that comes to you, you're competing with 5 to 20 people and they're all attacking, right? So it's like it makes it harder for you to charge the price point you need to, but also makes it harder for you to decline, especially if you're newer to the industry, right? So it's like so I like going to places where it's like more exclusive, like on LinkedIn, for example. I'm going to be one of the only people that are talking to this lead at this moment in time because no one knows they're actually looking for help, right? They're not coming to like a site like a Craigslist or something like that, right? So that's why I like doing things like that. That's why referrals are also pretty good because they're not like shopping around. They're pretty much decided that they want to work with someone like yourself. Next is lead experience. So, have they actually worked with someone like yourself in the past? Now, in a lot of cases, it actually makes it easier for you to go and close the deal because they know exactly what they're looking for. Now, they're generally more informed as well about like the way it works with working with you. And they don't have a lot of like fear-based objections or they don't have warped views of what actually working together will be like right? Because they already know they've definitely been with someone else. Now, it might not be exactly the same, but they have an idea and they're a lot more informed. So it's easier to sell informed clients than it is to sell uninformed people. Mhm. We'll talk more about lead experience. We talk about like price control because it's not just about like consistency of the client, but it's also based on like how much you can charge to. So I'll talk more about that in a second. Next is going to be your sales flow and your consultation calls, right? So I believe everyone should have a consistent process on their calls. A sales flow is basically a path or consistent process that you take someone down within your consultation call to ensure they're as educated as possible about why they should work with you. Okay. If you notice, all this stuff really comes about education right? If you notice, it's like I keep talking about like so the lead quality is because they're uneducated. The lead sourcing is because some are going to be like going to a million different people, right? It's hard to like price. Next is like the lead experience because they're educated on what it's like to actually work with someone. Your consultation call is a consistent education process in the consultation call. It's all about how educated a person is about working with you before they pull the trigger and before you give the price, right? Because if you take like a long time to do it after the price, then it's just like it just causes the sale to kind of like hang in the air for a long time. We'll talk more about that when it comes to like sales the sales cycle control in a minute, but it's like I prefer to get all my education and learning done before the person's ever spoken to me. So then I can just on the call, we just say the price and then they go. Versus, historically, like if you don't have very good like marketing or education process, then you need to do more on your call, or maybe even do like two or three or four follow-up calls in order for the person to feel really comfortable with you. So it's like, yeah, as you get more and more experience in the game, try and get more and more education done beforehand. Also, I'm not really going to talk about like the sales consultation call in great detail. I'm gonna talk through it today, but like we have other videos on the channel that talk about like how to build a sales script. The video that gives you a sales script on the YouTube channel. It's a little bit earlier inside of it, so just scroll down until you find stuff on sales. So there are three sections to every successful sales consultation flow. Number one is going to be the question and answer. Also, if you notice, I'm not saying a sales script. So most people like are looking for like I call it a sales flow, not a sales script, because a sales script has no flexibility. For a beginner, using a sales script is very hard because you sound scripted. Having a sales flow is better because you know there's a set of points you need to go and touch on throughout your entire conversation in order to make sure the person is as educated as possible about why they should work with you. But so in every single successful sales flow, there's a question and answer. There's a series of questions you ask in order to like understand like where are they at, what are the problems they have, why is it important for them to figure out like what are their goals when it comes to that, et cetera, et cetera. Next is the presentation. It's how you basically bridge the gap with all the questions and problems I talked about earlier. Now you're basically telling them like why they should work with you and really giving a really good explanation as to how you can help them out. After that is clarifying questions or concerns. Now, again, we have other videos on the channel that are gonna like break down exactly what to say. So don't feel bad if like maybe you don't know what to say based on this explanation, right? It's more meant to get your mind in like the right spot, and then you watch other videos that talk about like what to do in specifics. Okay, because I personally just don't have that kind of time on this video to dedicate to teaching you an entire script. Like that can be like a 20 to 45 minute video on its own. I'm not gonna have a 2 hour long video right now. So I just have some things to do in a few minutes. Awesome. So next thing is price point control. Hey guys, so I was filming the video earlier today. Something kind of came up, so now it's nighttime and I'm filming it for you. So price point control. So price point control is the ability to charge the price, or maybe on the higher end of the reasonable spectrum. Now, keep my say reasonable spectrum, like we're not just price gouging people or just charging like astronomically large amounts of money. We're doing stuff that's like reasonable. There's always a definite explanation of why we're doing it. We can talk about that, in different videos or later on in this one. So, for example, if everyone wants to charge a particular price between $300 to $800 per month, the person with the best control of price point will be closer to the $800 mark, where most people who haven't developed their sales skills enough will struggle to charge more than about $400 per month. Now, most of the time, people who are learning sales don't really understand that like price is a direct trade between a pain or desire that someone has and currencies. Okay, so it's like they have a pain or desire. So in some cases they don't have pain, they might have a desire, they want to go someplace, and they're going to trade it with money. Now, if you focus on, if you focus on like talking about yourself, like how many years of experience you have, like your degrees, etc., that can get you inside the door. Yes. I'm not gonna say it's not. I'm not gonna say it doesn't have a place. But or in some cases, like um, if they're skeptical because like maybe you lost trust in the way that you're communicating, then they'll ask about those. So oftentimes like that can kind of give a false sense of importance because sometimes like what happens is like people will be like, oh, you don't have this many years of experience, or oh, you don't have a degree in this, or oh, you've been doing accounting, but you haven't been doing bookkeeping. That's generally because you lost trust somewhere. They don't trust you, they don't believe in your skill set, and they're basically just giving you a reason to it's something they're not attacking you, they're attacking something you don't have, so you can't get upset with them. They're basically trying to spare your feelings, but that can be really harmful because then you go like down this rabbit trail, like 5 years of going back to school to go and get a degree that you never really needed in the first place. Now, those will get you in the door, yes, but it will not guarantee that you'll get a high price point or even get a client at all, right? So back to the cleanup plan I was telling you guys about earlier. So it was a cleanup project, and please forgive me. I know there's a little bit of typos and stuff. I was gonna ignore it for a second, but yeah, I don't know if I got a chance to look at this part before we went, but It was basically for a cleanup project where I had to go back 3 years to provide financial statements. So he could basically go and apply for an apartment building. I charged about $1,100. Now that was back in 2015, and even then that was not a high amount of money for the work. I was just so happy because like I talked about earlier, like I didn't have a consistent close rate, right? So I was super desperate at that point. I had already spoken to like 35 other people and no one had said yes, right? He was the first person to say yes. And to put this in perspective, right? Some people are like, well, $1,100 is not bad. I basically charged him $30 per month that cleanup, right? It's 36 months for the cleanup. So you do 1,100 divided by 36 months. That is $30, right? Huge opportunity missed. I know. I can laugh about it now and but like when I figured out like what I should have been charging, oh, that was annoying. So nowadays, for perspective, whenever I do cleanups, whenever like we teach our students to do cleanups, I take whatever my monthly price point is and I multiply it out by the number of months that I need to go back to either need to go back and slash or that I need to fix. Now, knowing what I know now, I should have charged that guy about $12,000 for that cleanup. So I underpriced it by a factor of 12x. And I could have even negotiated for an additional $3,000 once the loan got approved. Right, again, it's about sales skills, price point control, right? But even if I did know what price to charge back then, there's no way that he would have paid me that price. My sales skills just weren't that strong. And like I just didn't really understand like what influenced the sale, right? So the key is he would be willing to pay the right person that amount of money. But with the way I was presenting myself at that time, there was no way he would have paid me, right? That's important, right? We keep talking about price point control. So they're gonna pay someone a high amount of money. It's just who do they respect the most and who do they want to pay with? But they don't really respect your skill set or you. And it's not like disrespect, like they hate you as a person. It's just like, some like when you go to your doctor, you expect there's gonna be like a bill, right? Your insurance is gonna cover it, but you expect it's gonna be like expensive, right? Versus if it's just like some person up the street who like took like a bio class, it's like you're not gonna respect their opinion on like medicine. You know what I mean? So one aspect about price point, and we're gonna transition to another topic we talked about, is whether or not someone has worked with someone in your position in the past. Sometimes what happens is people will be like, hey, this person said they worked with a bookkeeper. This person has a bookkeeper on staff. I mean, that is not a bad thing by any means, right? Because oftentimes, like, they might have a bookkeeper today and that bookkeeper's gone tomorrow. But another reason why it's important is because that means they're informed on like what a price range should be. And you can use this to make sure that like you can set proper expectations around price before you drop your price. For example, let's say in the past they went with like a giant firm that was very expensive. Or maybe they went with a person that was like super overpriced. Now, both of those kind of examples will have a different way that you talk about the value in order to influence what price you can charge. Now, as very simple, we can do it based on what they try. So, for example, for the high price person, I would generally try and price my services as close to what the previous person did, if especially if it was a high, if it was like a really multinational firm, I would set the price as close to them as possible. That's what they're used to. Okay, now that's assuming that the price like fits your pricing criteria, right? Just because a firm is big does not necessarily mean that they're charging a high price point. Sometimes there are some firms that will charge super low prices just to keep the client around throughout the entire year, right? Because they're focused more on like the tax work or compilations, or they're focused on like tax strategy and tax planning. So sometimes they'll use like bookkeeping as like a loss leader, right? So assuming that they're charging a high price that's in line with the way you price as well. And if you don't know how to price, like we do give pricing calculators inside of our program and teach you how to use them, how to communicate like the strategy of like what to say around the price. You get people like willing to pay you more money. Now, in the example that maybe has paid like a lower price, like maybe they went with someone who's like really small, like maybe they're charging like $150 a month, when they should actually be paying like $1,000 a month. So this can be slightly challenging because you have to be able to explain a logical reason why it didn't work out with the last person. And generally you have to kind of make it around the person didn't work out either because like their price did not really allow for the correct level of support that was needed to get the job done, and slash or you can go the route of like maybe the person was very inexperienced or unconfident in their ability That's why they charge such a low price point. And you're effectively communicating that, why you're going to be charging correctly and why you're going to be charging a higher price point. It just makes it very easy. Like it's all about logic. It's all about logic. This whole game is about like, can you can you talk in terms of like getting their pain points that are emotional, and then can you like get them to understand logically why working with you is like the best next step. If you do that, then like all this stuff gets a lot easier. Next thing is going to be sales cycle control. So a sales cycle is the average length of time that it takes from when the person first hears about you to the time that they buy your first service. So, fun fact, you can also track the sales cycle of when a client purchases additional services from you. So, true mastery is when you can map out the client journey across three or more service offerings that you have. That brings the ultimate level of predictability inside your business. Like, if you know one client 10 days after they join, and like they do like a tax return, they're also gonna need a cleanup. And then 10 days after that, they're gonna want your monthly bookkeeping. Then 10 days after that, they want like your tax planning strategy. Or then 10 days after that, they might want to use like business credit repair, right? Let's say you have that, but just saying you do, right? If you know the time frame in the span of 50 days, they've bought five different services from you. Oh, you can make as much money as you want, right? Because then you can just spend money on ads to get more and more of the first thing, because on average you're gonna have more sales, and that's when it really, really can scale for you. But yeah, that's a topic for a totally different day, totally different time. Now, keep in mind, sales cycle control is not just about getting someone to buy today, but it's really about being in control of when your average lead buys from you. So, for example, this will actually change based on where your status is in business. So, when you're first starting out, like you want people to close and sign up like as fast as possible. Like if you can get someone, you meet someone on day one, and they buy on day one, and they pay you on day one, and that's ideal, right? So that your business has legs, it can stand, it's supporting itself, and it's a real thing. But as you actually start getting more and more full, like you have more and more and more clients, and also just to clarify, the reason why there's so many typos in this because I was voice typing this document, so 100 typos. It's harder to read it for me because I have to read this thing as well. But that's what we're saying. So the more full you get, sales cycle control actually becomes your ability to get people to wait and start with you by joining your wait list. So maybe your wait list is like 1 month, 2 months, or 3 months. They join, let's say today, and they're not going to be able to get started with you for 3 months. That's a skill in itself, getting people to be willing to wait, right? If you're thinking, well, no one's going to wait for me to like get ready, that just means that you just, aren't quite there yet skill wise. And that's okay. Like, you're not going to just like have this stuff mastered. Like most people are not salespeople by birth or by like, chance, right? It's like skills. And that's a good thing. It's skills. You just keep building up your skills and then be able to have the money follow you. I have no doubt or concerns about my ability to go and make six figures per year as long as I have access to the internet, I have social media, I have certain internet-based platforms, and I have a service that I can just sell pretty easily. Like that, like if I have a service, there's enough people on the phone, I can make six figures every single year. Okay. And that's because I have the skills. The skills, right? The money always follows the skills. Conversely, let's say that you also have like a giant health bill. Like I think like a year and a half ago, I got like it wasn't dehydrated, it was like a heat stroke from driving like 4 hours in this car with this one friend I was helping her move. And I didn't realize, but she actually turned off the AC. So for 4 hours, we're driving this hot car, windows up, AC off. And I just got this like heat stroke. That bill, it was like $6,000 for 45 minutes in the ER because the urgent cares were closed for the day. Like it was after hours of the urgent care. It was like around like 7 or 8 o'clock. So urgent care closed like 7:30. So I had to go to like the real hospital. And like that thing was a $6,000 bill. It was interesting for 45 minutes. I was like, I'm in the wrong line of business, man. But sales cycle control is your ability to go and get new revenue very quickly. Yeah. Now, sales cycle control is actually the hardest one to really get good at. Okay. Now there's really three aspects of sales cycle control. Number one is about asking urgency-inducing questions. That's inside your Q&A section. Number two is reframing timing objections, right? That some people might say, oh, I need to wait for this much time. I might need to do this. So I'm not ready to talk to you yet because of this XYZ reason, right? Third thing is only speaking with leads that are ready to buy in the time frame you want. So asking urgency-inducing questions is really getting the pain, understand like why is it important for them to do it, like what have they tried in the past, what happens if they don't get this thing figured out, and just like questions that really get them to really understand like there is urgency with this, and there's a reason why they need to move forward with you quickly in order to get these problems solved. Number two is like reframing to shorten or lengthen the sales cycle. Remember, it's not just about going down, it's about going up. If you're going to try to shorten the sales cycle, you need to be able to ask the right questions to get them to logically believe that now is the right time. Notice how I said you need to ask the right questions. It needs to be their idea. Okay. So again, the reason why it needs to be their idea and needs to be based on logic. Okay, it's not like sometimes what happens, like someone might give you an objection, and most people who are not good at sale goes, well, you need to have a bookkeeper because of XYZ reason. You're almost never going to sell someone if you say something like that, like a rebuttal like that. And like, like I understand it's like, well, there's all these different reasons why they need our service. But if they don't believe that they need the service, it doesn't matter what you say. It's actually going to push them away even more, right? Keep in mind, so whenever you're objection handling, things need to be someone else's idea, right? So you ask questions to see how the person believes and feels in order to give them a different perspective that reframes the way they're thinking about the world that makes it more accurate. Keep in mind, this is not like if you're telling someone something, oftentimes they're gonna feel like you're just trying to sell them something. And I am not saying that you're hiding the fact that you're trying to sell them something. What I'm talking about is more neutrality of the advice you give within the sales call or the consultation call. There are things that you say that get people to move forward for your reasons. And if you're saying stuff that is like for your reasons, people are going to feel like you're pushing something on them that they do not need. Whereas if you get people to understand and you give people reasons that are in their best interest, then it's more professional, it's more of like you being an advisor, and it's oftentimes easier for them to understand why, right? So it's always about thinking about like why is it in their best interest to do it, not just why is it in you, the bookkeeper, or the accountant's best reason to get started. Now, if you do it for their reasons, and even if it might conversely hurt the sale. So for example, if someone asks you a service and say, oh, I don't really offer that service because of XYZ thing, you might think where it's like, oh, well, that person's not gonna want to work for me, that person's not gonna like me because of XYZ reason. Really, they're gonna like you more because you just admitted something that actually it disparages your case a little bit, but it keeps them safe. So they know that they ever have like they're ever in a pinch and they need like a real answer, you're gonna tell them the truth. That builds trust. That builds trust. Now, the cool thing about our service is that generally what's in their best interest is also inside of our best interest. So if you do it correctly and if you like talk about it right, they're going to want to work with you. So you can give impartial advice that just so happens to be the best thing for them as well as something that's good for you. The next one is going to be cash flow control. Okay. I was speaking to a lady recently. Now, at the height of her business, she was doing about $258,000 per year in revenue, but in cash, she was only doing about $75,000 in cash. The reason was because people weren't really paying the invoices that she was sending. Okay, so if you notice the difference, 258 revenue, only collecting 75K in cash. That's a lot of revenue that has to be written off, right? Now, being able to look at your client's books, give them a right price, and getting them to pay comes down to processes. And we have different videos talk about like how to get people to like pay you more and pay faster. So I'm not going to go like into the process aspect. I'm going to go more into the mindset aspect of of um of this, right? So it's all about number one, being able to protect yourself as much as possible. So sometimes when you're going to get a client, you should look at the client's book to see like if they have a habit of like bouncing payments or not paying their bills, right? Part of being good at sales is knowing like which clients to turn away because not all money is good or peaceful money, right? Sometimes like you might take on a client where it's like, oh, I don't like this guy, but I need the money, right? As you start getting more and more successful, you need to be able to start like avoiding clients like that and start protecting really like the freedom that you got, not just time freedom, but also like mindset freedom, also like having peace, having joy, and having like really good stuff that like allows your life to be, more fruitful. Now, this actually comes down to your sales skills and your confidence in your sales skills. Because remember, you're always going to have another consultation call in the future. And if you have a consistent close rate, like we've already talked about earlier, like the first thing we talked about, you know another client is right around the corner. Another aspect of cash flow control is on the consultation call. Like, are people getting, is really getting people to put down as close to 100% as possible. So let's say, for example, a cleanup. You have a couple of different ways you can do the payment terms. You can get 100% upfront. You can get 80% upfront, then 20% when the work is done. You can do 50-50. You can do 20-80. You can really do any percentage between 1 to 100%, right? But these are just the most common. Now, the difference between whether you get paid 100% upfront or get paid 20% upfront is your ability to communicate why someone should pay the full amount upfront. And again, this is not black or white. This is the area of like gray, right? Where some people that you're going to speak to, like they are master negotiators. Okay. Now, like, because think about it, in order for someone to be doing like 3, 5, 6, 7, $10 million a year, right? They have to be good at sales. So they're probably going to be better than you at sales. I'm not trying to be mean. I'm just telling you the truth. Like, someone making $10 million in sales, like, they're probably better at sales than someone who's, sub six figures. So you have to just do the best you can and keep improving. And like, in a lot of cases, like, worst case scenario, I'd probably do 50-50. If I'm being honest with you, like that'd be like worst case scenario. I probably wouldn't do less than 50 unless it's like a significant amount of money. Like if you're quoting someone like $20,000, right, and getting like 20% of that, okay, that's not terrible, right? That's a significant amount of money. They can actually you put that in the bank. Okay. Now, other thing though, make sure man, my voice typing was very, very very off actually. I would just make sure I'm trying to get like an ACH authorization form or a card on file I can pull from. The reason why is because some people are dishonest, like they'll agree to something up front and then just like not finish paying the balance. That's why like earlier I said like sometimes look at the books to see is this a person that's really honest? Like what's their payment history been like? And we're using the past in order to predict the future. Now, in terms of the deposit percentage, you can do the same thing with your monthly prices. You can actually have some pay for your entire like year up front. So let's say it's gonna be $5 a month, right? That's $6,000 per year. Some people will actually prepay for the whole entire year if you give them a good enough reason for it. Especially if it's even at the end of the year too. You can have them like if they've made too much this year, you can even have them like pay for the whole entire next year. Like the entire like you can literally have them pay for 2 years right now to kind of deduce it from their tax bill. So yeah, again, that's a logical reason why, right? Oh, you pay too much in tax, why don't you just prepay the next year, prepay for the year after that. Some people will do that. He actually had a student program. He was literally so good at cash flow control. He would get someone to pay for the first month, like 3 months before they're actually ready to get started. So he had a mixture of a wait list and he had really good cash flow control. So he put them on a wait list. Hey, I can't get started with you for about 3 months, okay? But put down the first month right now. That's going to hold your spot. And then 3 months from now, when I get started with yours, that'll cover the first month. And the funny thing the funny thing was it actually became even stronger than that because he ended up just doing like 750 just to be on the wait list. And you pay the first payment of 750 when you're ready to get started. So he would actually get about $1,500 before he ever even touched their books. So that was real good control. Awesome. So hopefully you learned something new about this video and learned something new about sales skills and the 4 different ways that you need to be improving in order to get good at sales and really call yourself good. And if you want some help growing your business, like I know it's a lot of stuff. I know you're probably not a salesperson who watches this. If you want me to just like give you all the answers, like when you're in a consultation called like how to master this as much as possible without becoming a salesperson, go ahead and click the link inside the description either above below the call. Book a call with myself or a member of my team, see if we can help inside of a mentorship program. Okay. I will talk to you soon. I'm going to get going. Have a good rest of your evening, good rest of your day. Take it easy.